What's up, everybody? It's Professor Reiko here, and today we're continuing on with the example we started the last one. The last video we did periodic inventory. Now we're going to do perpetual inventory. So these are all the same numbers. Okay, so I encourage you to go back and watch that video first because the periodic method, doing these inventory cost flow methods using periodic inventory system is much easier. So that gives you a good baseline. Plus, you can see what last one, this is our beginning inventory, June 1st. These are all my purchases right here. And then that gives me goods available for sale. And so you can see when we're doing these problems, we want to be able to account for all the goods that are available for sale. And then we're going to assign cost to these 44,220 units that will total 34,651. Now look, of those goods available for sale, remember we either sold them or they're still left over. All right, so this number right here, the 3460 is sold. That's how many we sold, adding up all these numbers here, getting at a total there, it'd be 3460. So there are 760 in ending inventory. Okay, so what we're going to do is put a dollar value on the 3460 and a dollar value on the 760. All right, so if you notice here, the last video, we didn't even really focus on the sales side of things just to get the 3460. That's all we needed. All right, but now, so we still don't need this. We don't need this in either example, and I probably should have pointed that out in the last video. That's just how much we sold them for, which is really irrelevant because we're focusing on the cost side of things. However, now we are going to need this column. Okay, we're going to need to know when we sold them and how many we sold so we can apply cost. So under the perpetual system, remember, we have to update things every single time, so it gets much more involved. And so I probably won't even do the entire problem. I'll just show you how to get it going, especially on average cost. All right, so with average cost, remember average cost is the way we do it is it was the dollar goods available for sale over the units of goods available for sale. And that gives us our average cost. So in the periodic one, we just took the 34,651 and divided it by the 4,220 units, and we were done. But now what we have to do under perpetual is update it every time we buy some more. Okay, and then update it when we sell some, and then update it when we buy some more, and so forth. So it gets to be a much more involved process. So we will only do a couple of rows because it would take us a pretty lengthy amount of time to do this entire problem with the average cost method. So let's just get started on that. So what we're going to do here, so we're going to start with June 1st. All right, on June 1st, we have 600 units at $8.20, and that's a total of 4,920. Okay, and so what I'm going to do over here is keep a running, let's just move this over a little bit more. I'm going to keep a running total or a balance of what we got going on. So on June 1st, all we have is the 600 at 820. All right, so it's the 4,920. All right, on June 3rd, the next thing that happens is we buy some more. So what did we do? We bought 750, and we paid $8.10 for those, and that worked out to be 6,075. All right, so my balance now, I now have 1,350 units. That's just the sum of those two. But what is my dollar value for each? So what I'm doing is this formula up here, but I'm just doing it at where I am now. So I'm taking the sum of these two numbers here, and I divide them by the 1,350, and I get $8.14. And so now I'm up to 10,995, which you'll notice is the sum of those two numbers there. Now on June 4th, we have a sale. Okay, so on June 4th, we have a sale. I'll put those over here. We sold 280, and so our cost at this point is $8.14. Okay, so we sold 280 at $8.14. That equals 2280. All right, so now we have 1,070 in our balance. They're still valued at $8.14. We only changed that when we purchased some more, and that works out to be 8,715. Okay, which you'll notice is this number less that number. Okay. So our next thing that happens is June 6th. We buy some more. We buy 1,100 at $8. So that was 8,800. All right. So now we need to update our balance. So that brings us up to 2,170. And so what I'm doing now is I'm taking this this is my balance, 8,715. Plus that gives me my dollar value available for sale. Divide that through. And you can see I get $8.07. Okay, so you see it goes down a little bit, but it makes sense that it went down because I only paid $8 for all those 1,100. So it's going to bring my average down a little bit. All right, that brings my total to 17. What does that work out to be? 17,515. And once again, notice it would be the sum of this number and that number making up my balance. Okay, and then let's do one more sale. So on June 9th, we sold 330. And so that would be at the $8.07. So that works out to be 2,264. All right, and that means we now have 1,840 units, still at the 807, and that's going to be 14,851. All right, so you can see this is a rather lengthy process. You have to keep updating updating the weighted average, which are these numbers, every time you have a purchase. Okay, and then every time you have a sale, you just need to update your balance. Okay, but once again, if you take this 17,515 less the 2264, you should end up with this 14,851. Okay, unless I have a typo in there. All right, so like you said, I've only been through June 9th. So you can see there's several more transactions to go. So we could pretty much fill up this whole page with just this portion of the problem, but it would take us 20 minutes to do it. So hopefully that gives you the hang of that. I would doubt seriously if your teacher gave you a average cost method using perpetual inventory on the test, it would probably be very short, like maybe this long, and that would be the end of it. Because if not, it takes so much time, and then you're not proving that you know anymore by doing more and more rows. As long as you can do it up to this point, you at least understand the concepts and how to do it. All right, so let's switch gears now, and let's do LIFO. All right, so LIFO, remember, is last in, first out. So we're still trying to account for the 3,460 units that were sold, and the ending inventory is going to be the 760 units that are still left. All right, but what we're trying to do is put a dollar value on those. All right, so what we need to do is every time we have, so let's do cost of goods sold first. So every time we have a sale, we want to put a cost on that. So let's start with our June 4th sale. Okay, so we sold 280 units. Okay, what is the cost? So let's look up here. We're at June 4th, which means the only stuff that's happened are the beginning balance and that June 3rd. So we're applying LIFO at this point in time. So the last stuff in are those 750 to 810. So we sold 280, which means we sold 280 of those 750 to 810. So we are going to apply the $8.10 to that, and I'll do all the totals at the end. Okay, that's $8. Sorry. So that was, sorry, I kind of did my eraser there. That's the 3,460. Let me just scratch that out right again. That's the 3,460 units sold. And then what did we say that was? That was the $8.10. Okay, sorry about that. All right, let's go to June 9th. So on June 9th, up here, so we've had this purchase as well. So we sold 330, but we have this big purchase here of 1,100. So what this 330 that is sold, they're going to be made up of the 1,100 that were bought at $8. Okay, so that takes care of that sale. All right, so on 6/13, okay, so this adds a new dynamic here. At 6/13, notice we sold 800. Okay, so now we've had this June 11th purchase. All right, so notice we have 620 here, but we sold 800. So that means we sold all 620 of those. Those are considered now gone at $8.30. But we need 180 more. So now we're just applying LIFO, and we get the other most recent stuff. So we get the 180 at $8. All right, so notice these two $8 purchases. So we had 330, and we sold another 180, but that's still, what's that, 510. So we still have a lot more of those that we could still sell. Okay, so let me scroll down just a little bit here. So that was the June 13th. All right, so now we're on June 18th. So the June 18th sale is, we sold, let's see here, we sold 950. Okay, so we now have this sale purchase, that the June 15th purchase of 500. So we sold 950, so that means we sold all 500 of those that we purchased on the 15th, and that was at $8.50. But remember, we sold 950 total. All right, so let's look up here. So we sold 500, so those are considered gone. These 620 were already gone, which means we're back to these 1,100 that we purchased at 8. And remember, we still have a bunch of those left. We need 450 more. Okay, and they all come from there. Okay, because remember, we've sold 330 plus 180, so that's 510 plus that, so that's 960. So we still have some of those left if we need them. Okay, we still have what, 140 of them left. All right, so that takes care of my June 18th. All right, so let's do our June 26th sale. So we sold 1,100. Okay, so if you look, so the first part of it, so these are going to be sold, a part of that 1,100. So we sell 650 at the $8.40. Okay, but look, so these are gone, these are gone, these are gone. We have 140 of these left. All right, so let's sell 140 of those. Let's do a dollar sign there, $8. Okay, now those are all gone, the 1,100. So let me just scroll back up here and see what we're dealing with. All right, so we now can go back into the 700 and the ones I purchased at 810. Okay, so if we look down here, we only sold 280 of those at 810. So there's plenty of those left to make up the difference. So we're going to get the remaining 310 of those at the $8 from that $8.10 purchase. Okay, so you can see there's a lot to keep straight in these. All right, if we add this all up, we should get 3460, assuming I didn't write a wrong number down there. And this all totals up to be the 28,435. Okay, so there's my 3460 units sold. So the ending inventory is everything that's left. Okay, well, let's go up here and look, let's see what's left. All right, the only thing that's left, so remember, we've X'd out that, and that. Okay, so the purchases, so of the 8 June 3rd purchase, the 750 at 810. All right, we sold. Here's 280 of them here, and then here's another 310. So that's 590. So what do we have left? We have 160 of those left. Okay, so the ending inventory would be 160 of those at the $8.10 left. And then notice of the beginning balance, the 600 at 820, notice we never touched those. They were never touched at all, okay? So they're all still sitting there, 600 at 820. So once again, there's my 760 units, and this works out to be 6,216 for the cost. Add those together, and there's my 34,651 that I want to account for, okay? So once again, a lot of work goes into this part right here, and then this is just what everything that's left. But we kind of have to keep up with that. So each time we're really going back and looking through and seeing what's there. All right. So now let's do FIFO. Now remember, FIFO we start at the beginning. All right. So let's just get a good look. So of the June 4th purchase, we're going to sell the 6. They'll come from the 600. Notice the 330 purchase. So look. Of this, once we sell 280 of these, we still have 320 left, which means 320 of these 330 will come from that, and then the next 10 will come from there. And so we'll start that process. So let's come down here. I know it's kind of hard because we can't see everything, but on the June 4th sale, we sold 280 at $8.20. On the June 9th, we sold 320 of that beginning balance. So that beginning balance, that's the 600 of the beginning inventory. It's all gone now. But we needed to have a 330, so we sold 10 from the next pile, or the next purchase. All right, so that was $8.10. On June 13th, we had a sale of 800. So let's go back up and look here. So June 13th, we can see there the sale of 800. Okay, so that's we need to figure out where that comes from. So June 13th, we're still going. Remember, it's first in, first out. So we're just going back up to the top and grabbing what's left. Okay, so of the so that means we're going to sell 740 are going to come from the 810. All right, so now my 750 of those are gone. All right, but remember we wanted to sell 800 here, so that's 600 from the, I'm sorry, 60 from the next batch. That 1100 at 8, so that's $8. And then on the 18th, oops, sorry, can't write. On the 18th, let's scroll back up. We can see we sold 950 more, so let's go and grab those. Okay, so we sold what would we just say there? 950. All right, so we're still pulling those from that big purchase of 1100 at $8. Okay, on the 26th, we had our another big sale of 1100 units. So let's grab those. So we're going to sell 90 at $8. That's a 90 at $8. All right, so look here. These three right here, that makes up the 1100 units. Okay, so that, 60 plus 950 is 1010 plus 90 is 1100. So that's that 1100. They're gone. Okay, we sold 620 from the next. So let's scroll back up here and look. We sold the 620 from the June 11th purchase, and then we're going to dig into the June 15th as well. All right, so 620 at 830, and we're trying to get to 1100 units here. We're only at that 710, so we need 390 more, and that comes from the next purchase that was at $8.50 that took place on the June 15th purchase. All right, so like I said, so this is a lot going on here. So you can see if I add this up, there's my 3460. And the sum here works out to be 28,256. And now the ending inventory is what's left. So we still have 110 from the $8.50 purchase. And then we have all of the 650 from the last purchase that was at $8.40. Okay, so there's my 760. And this works out to be 6395, and then add those together, and we get 34,651. So everything is accounted for. All right, so this is the perpetual method. You can see, I didn't even do all the average cost all the way through. We're 17 minutes into this video, so it's a rather lengthy process. But I like to be to work one out. Really pay attention to what your teacher stresses. They may tell you that it'll be a periodic problem on the test, or they may tell you it's going to be a perpetual problem test. So you've got to be prepared for that. You got to be able to think through, all right, I understand FIFO, I understand LIFO, I understand average cost, but then you need to understand how it changes when we switch from periodic, which is pretty easy, to the perpetual, which we did here, which is much more involved. So really spend some time, because obviously when you look through all the videos for this chapter, this is your big problem. We're going to add dollar value, LIFO, and a few other things on that will also come into play. But you can see these are pretty lengthy problems, so they're always a good candidate for a test problem. All right, so make sure you go through these, go back through, look at your examples in your notes that you might have, but hopefully this provides you a good extra example that you can use when studying for your exam. All right, so I know this one was a little bit long, so sorry about that. So thanks for hanging in there. We will see you next time. Thanks.